at the Goodwill Center. But because of the pandemic, as with everything else, we couldn't do it last year. And then, of course, this year was just as crazy. But I thought, before I retire, I was actually supposed to retire September. I wanted to make sure I give you another one before I retire. So I kind of delayed that retirement. We could be here today. So thumbs up for that. Yeah, I have to apologize that it's so late, but at least I'm going to be able to do it before I sign off as a city employee, right? And in previous conferences, we would have about 100, 120 people. Today, we are expecting about 220. So it is a big group. Had I known that this is what you prefer, I could have been doing virtual all this time instead of trying to pack you in a small training room, right? So we may have a few who may have missed yesterday. Okay, so yesterday we talked about the uniform guidance, okay, to CFR 200, because that is the federal grant regulation rules. If you have a federal award, and even if it's a city-funded program, we follow the uniform guidance. So that's your foundation. And that's why I started with that. Okay, everybody has to know that. And then we talked about how to prepare a budget. Okay, at least the EWDD procedures. And for those who are not with EWDD, you kind of just pick on what we do, and hopefully you'll get some good ideas or guidance. Today is an exciting day. Who loves cost allocation? I love cost allocation. So thumbs up if you guys like it. Cost allocation, we've been talking about direct and indirect costs, cost objectives, indirect cost rates. Okay, all that exciting stuff that Mary likes to hear about. And then I will try to finish that in the morning, and I'll probably start on financial reporting, at least the reporting requirements that we have in place at EWDD. And again, for the other city departments, hopefully you can pick some ideas from that one. So now you know how to cost allocate, you know what financial reporting requirements you have to meet. And then we talk about audit. We talk about the things that hopefully will not get you in trouble, or at least with audit findings from your single audit or your fiscal monitoring reviews from EWDD or from your city department grantors. So that's why the flow of the topics is like that. There's a reason for that. Let me introduce the staff again, because I know we have folks who were not here yesterday. I'd like you to meet the FMD team, my team.
Catherine, you're on mute.
Catherine, you're on mute.
Keipp muted me. What was I saying?
You were introducing her.
Introducing the FMD team. Kathy is taking care of all administrative stuff. Okay, your handouts, chats, whatever you need, please reach out to her. Keipp is our amazing main host and IT coordinator. I don't know how I would have survived yesterday without him by my side. So thank you, Keipp. Glenn, most of you know Glenn, who's taking care of logistics and our equipment. Say hi, Glenn.
Hello, everyone. Welcome.
Rovi and Steve, our senior accountant and senior auditors, they are coordinating things to make sure that everything's in place. So you can reach out to them as well if you have any questions. Okay, Rovi and Steve, say hi.
Hi, welcome.
All right.
Hello, everyone. Good morning.
Thank you for breakfast, Steve.
Good morning.
Oh, you're
Yes,
welcome.
thank you for the breakfast, Steve.
Thank you, Steve, for the breakfast.
And Edwin is everybody's favorite person.
That's right, Catherine.
Yes, yes.
Fiscal monitoring review, so I'm sure you love him, right, Edwin?
Good morning, everyone. Welcome.
And
Hey, he's my favorite.
Oh, thank you. Thank you, Jackie.
And Rose Tang is going to be my successor, guys. Rose, why don't you say hi? Because I'd like folks to see you.
Hi, good morning, everybody. Can you guys see me?
Thumbs up, thumbs up, thumbs up. Are you see her? So she's going to be the one you're going to be dealing with. Okay.
I know. I'm going to have all the fun stuff with you guys, okay? Audit, grant management, payroll, payable, okay? Look forward to working with all of you.
And of course, can I hear? I will be your trainer for today again. Okay, so I hope you're not.
Yay!
Yay! All right.
Yay!
I'm grateful that I did not lose my voice. I was losing my voice last night. So thank you for my mom's ginger tea. Okay, didn't
And
taste so
my
good.
friend-
But
Thank you, Tita Melly.
yeah, so as a good daughter, I drank it. So that's
My
your
prayers were answered.
Let me just go through house rules, okay? Make sure your profile shows your first name at least and your organization's name or acronym if it's too long. That way we kind of know who we're talking to. Preferably with your cameras on, but no pressure. We're okay here. Everybody's logged in as you log in into the Zoom meetings. We're okay. FMD, please put FMD next to your names. Okay, we should have the same background so it's easy to spot them, except for me. My background did not quite work out. So put FMD next to your name so people can see you guys. The scheduled, I did not intentionally set time limits for each topic because I kind of go depending on the questions that I get or how quickly, how slowly, and then I kind of adjust and I make sure that I end on time. We will have 15-minute breaks. No more, no less. Okay. Lunch breaks. We had a long one yesterday, but today, guys, only 1 hour. Okay. 1 hour. I'm thinking it's going to be around 12, but we'll see. Okay. We will end at 4:30. That's the plan, but depending again on your questions, I'm prepared to stay until 5 or longer if necessary to respond to any questions you may have after the training. Handouts. We sent you the link, so you should have them hopefully by now in front of you. I know some of them are thick, so I have bookmarks to make it easier for you to navigate through the documents, so make sure you use those. Nobody used this yesterday. We had 2 break rooms for workforce and economic development service providers to kind of hang out and say hi to each other. No one used them, huh? Kayo. Okay, fine if you don't want to use them. Questions through chat. We don't have that feature where you can ask questions because I think that feature is for webinars when there's no participation from the audience. I wanted a meeting so I can actually interact with you. And that's why I don't have that feature, but we can do that through chat or email any of my team, not me, because I will not see it. Okay. But Keipp and Rovi are pretty good at monitoring the chat. If you guys have any questions, they're calling my attention. So that way I don't miss it. The handouts links, we just sent it out again. Muting and unmuting. I would love to hear you guys. There's nothing weirder for me, like talking here, I say a joke and it's dead silence. So the rule is, guys, okay, if you think I said something funny or you grunting about something I said, you unmute, you laugh, and then you mute again. Okay? That's the rule. Now, if you're rolling your eyes, which is kind of like my favorite emoji, maybe just use an emoji. Okay, there are emojis there to show reaction. It just kind of helped me keep the energy for you guys when I know that you're reacting. That's just the virtual world for you. We will have raffles. I forgot to do this yesterday. So for those who are not here again, they missed out. We will have gift cards raffle throughout the day. Okay, to give out. Probably we'll start after the morning break, Rovi, so be ready. We'll start with the $10 ones and then 20.
Okay.
And then I think our biggest one is $50.
50, yes.
Yeah, 50. Yeah.
Yes, yes.
It's a big group right now. I see almost 190 people logged in. So yesterday was very successful. Everybody was courteous and respectful. So I expect the same today, okay? We will try to manage the big group that we have, but just be patient with us. If there's too many of you asking questions, we will do our best. So let's just keep it pleasant, positive, energetic. Even if I only had 2 hours of sleep, I will try. Okay. We will take group pictures. Yeah. Okay. Okay. We will take group pictures. Okay. We will scroll through later because, guys, you got to give me a souvenir. This is my final fiscal training. I got to have pictures of you guys. Okay, so indulge me later. Now, the quizzes, we tried to do yesterday using the polls. That did not quite work out. That's not because we were unprepared. We actually tested that twice, Monday and Tuesday, and it worked for us. But for some reason, it didn't work out for some yesterday. They could not see them. And I think it's probably an individual setting where you are, not us. So today for the quizzes, we will not use the poll feature. We will send the quiz through the chat. Okay, it's going to be a Word document. And then you can kind of click on the bullets and then we'll go through it together. Because I think some of you like the quizzes because kind of test what you remember. So the ones that we were not able to do yesterday, we will do them today. Okay, so that will kind of test you on how much you remember from what we talked about yesterday. And for the ones who were not here on day one, guess what I expect from you guys? I expect that you read the handouts, even if you missed day one, okay? It's supposed to be a 2-day one, and there's a reason we did topics in day one instead of day two. So if you missed day one, please go through the handouts at least. And with that, we will start. Classification, cost allocation, and indirect cost rates. Okay, exciting stuff, or at least for me. The PowerPoint will start a few slides on cost classification, and then we'll go through cost allocation. What are cost objectives? What are intermediate and final cost objectives? What are allocation bases? Okay.
Your video.
My video? Oh, you could not see me there?
Yeah, for a second.
Oh, okay. I did not turn it off. Okay, but you could hear me, right? Indirect cost rates?
Yes.
Okay.
Yeah, we can still see you and hear you. Depends on how you have your screen, but yes, I can still see you and hear you.
Okay. Thank you, Jackie. Jackie's pretty good at reacting. She's always responding to my questions, like the rest of you. And then common findings related to cost allocation. And I wanted to spend time here because like I said yesterday, cost allocation finding is something you never want to have. We'll pound on that topic over and over until you guys get it. And hopefully we'll never have to see a cost allocation finding from any of you. Okay. The handouts, again, there's bookmarks on the side. But this one should not be very thick. It's only 54 pages. Not very thick. Yesterday was 129 for the uniform guidance. So cost classification. I forgot to put captions on the pictures, but these are from our youth programs. Cost classification, ready or not, here you go. It involves the separation of a group of, let me just move my gallery here because it's covering my slide. Separation of a group of costs into different categories. Okay. For many grants, in order to comply with reporting requirements, it will be necessary to classify costs by various cost categories, such as program activities. So here's where cost classification becomes really critical for your reporting. When you get a grant, you need to know what they want you to keep track of, whether it's performance or expenditures, or like you learned yesterday, financial obligations, what you have in contracts, purchase orders. You need to know what they want ahead of time. Okay, when I get a grant agreement, I'm already looking at the financial reporting requirements, because if they need to keep track of other than just expenditures, say they want to break down your expenditures, let me know how much is admin, how much is training, how much is program. And if you don't have that in your cost allocation system, you might be in trouble come reporting time. Okay, so that's something that you need to be aware of ahead of time. Okay, that way you can set up codes or whatever, work order numbers, or however you have your cost allocation system, you have that in place. So come reporting time, you have the data that you need to make the report. Okay, well, once you're not in compliance with reporting requirements, they might just put you in sanction. Okay, your grantor. So that's really critical. Financial folks, if you're not already doing that, please do as soon as you finish this training. Okay, classifications must be in the accounting system, preferably, ideally, okay, so that you can then easily generate a report from your accounting system. But not all accounting systems are capable of that. I mean, even for the city, we have a centralized accounting system. It's pretty robust, okay? But even then, there's only so many cost classifications that I can keep track of in the system. Can you tell your grantor, I can't do that because I don't have that in my accounting system? Does that spare you from the requirements, you think? I hope you're shaking your head. Nope.
No.
So that means, nope, I would still run after you if you're not breaking it down the way we require you to. So that means you will have to have some supporting schedules outside of your system to be able to keep track of that information. Okay, you should see our WIOA report. By the time we submit to the state, we have spreadsheets this big just to be able to comply. But that's your responsibility as a financial person. If you don't have that in place, and if you need to talk to your program folks, say you need your program folks, for example, to be tracking their time, you need to let them know. Okay, that way they understand. If you make them track their time on training, on work experience, that's something that they have to know in advance. So when you go back to your offices from this training, we usually have handouts, right? You don't go back to your office and put it away, okay? My expectation is you go to your program folks, to your managers, or whoever that you need to talk to make sure that your accounting system is in place so that you can then report. Most of the time, it's a joint effort between fiscal and program. You need your program folks to be working with you, okay? Examples for our WIOA and Department of Labor grants, we need to classify them into admin and program, and these examples I have here. So most likely in my accounting system, I will not be able to keep track of work experience and in school and out school. So I'll have to figure something out. Okay. If I know that in advance, you don't have to be correcting, doing adjustments retroactively. It gets painful at that point. Gang injunction, our LARCA 2.0 contractors, they have to keep track of all this. The reporting for that grant is pretty extensive. Our CDBG business source centers, Jackie, correct me if I'm wrong, but I think at least micro enterprise and technical assistance, they have to report separately,
Correct.
right?
And any other additional grants that they might receive.
How about admin and program for business source?
Yeah. Not
Yeah.
admin program.
No?
No.
No? Okay. Then my slide is wrong. Cross that out. Okay. CARES Act. We have so many COVID-related programs, small business loans, recovery grants, street vending. We're keeping track of those separately, childcare assistance. So see how different each grant is? Most of these grants will have expenditure tracking requirements, obligations that you have to know. All right. Know the grants data reporting requirements for both performance and financial reports. You should record them in your books of accounts or in supporting spreadsheets. You maintain adequate supporting documentation. Okay, if we go to you and we say, how did you come up with this allocation of this group salaries, and you don't have supporting documentation, guess what? You will have a question cost if you don't have supporting documentation. Okay. Let's pretend this is Edwin, okay? When Edwin comes to you, he's going to be asking for your separate tracking within your accounting system. You can't have all your grants in one general ledger. If you do, you've got to at least have some separate tracking so that Edwin knows which one is EWDDs and which one is HCIDs or LAPDs, okay? You document the methodology used to track costs, your cost allocation methodology. If there's anything other than that, just document it, and then you can explain it to Edwin when he asks you. This one, that's what you need to maintain, okay? We can go back to the details of the records and it will be available for us. Try to be diligent about that so that you don't run into problems when you go through your single audit or when our fiscal monitoring team goes to your sites for a site visit, or at least enhanced desk monitoring, okay? That's what we're looking for, especially for things that are cost allocated. So now, section 2, cost allocation. Let's review first the factors of what's an allowable cost. This you have to memorize. Each expenditure must meet all these requirements for them to be allowable. Okay, I want to stress the last bullet, not included as a cost or match for any other federally financed program. Remember that. If you have an expenditure that you promised as a match for another program, you cannot then charge me. Keep that in mind. It's like double charging. Okay, again, adequately documented. We have so many agencies where it's allowable, but they cannot produce the invoice. They cannot produce the timesheet. They cannot produce the allocation schedule, and they get in trouble. Okay. You see here, that square yellow. If you see that, that means where you can find that in the uniform guidance. Okay. That way you know exactly where to look. So for those who were here, that's 2 CFR 200 subpart 403. Okay. It's the uniform guidance citation. A cost is allocable to a particular federal award or other cost objective if the goods or services involved are chargeable or assignable to that federal award or cost objective in accordance with relative benefits received. I don't know if it's just me, but when I'm reading a definition from the regulation, I have to read it 5 times. Is it the same for you guys? I mean, the way they just define it is just what, you know? So if you're like that, don't worry. I'm the same way. Like I had to read, what were you saying? You know? So, but the key here is relative benefits received. You don't want to be charging a funding source that's over what they benefited from. That's what that means. And we'll go through that more in a little bit. Allocable standard is met if the cost is incurred specifically for the federal award. Easy, right? Straightforward. It benefits both the federal award or another work of the NFB and can be distributed in proportions that may be approximated using reasonable methods. And we will talk about what those methods are. And it's necessary to the overall operation of the NFE, and it's assignable in part to the federal award. And keep in mind that when the slide says a federal award, it's because it's the federal regulation. But think about this regulation being applicable to your city contract as well, okay? Because we're adopting the same regulation. So don't let that throw you off. Allocation, definition of allocation. It's the process of assigning a cost or a group of costs to one or more cost objectives in reasonable proportion to the benefit provided or other equitable relationship. Any question about that? Is that a clear definition from the regulations? The process may entail assigning a cost directly to a final cost objective, meaning there's no allocation necessary. My time, for example, I'm preparing a report for WIOA, so I know that time is directly charged to WIOA. Okay, you may have a group of accountants, for example, who are working, processing different invoices. Those may have to be cost allocated to different funding sources, right? That's what that means. And we will have an example. I know for accounting folks, this is probably basic stuff already, but we do have some program folks who need to know about cost allocation as well. So for the fiscal folks who are familiar with this, bear with me. Cost objective. A program, function, activity, award, organizational subdivision for which cost data are desired and for which provision is made to accumulate and measure the cost. It may be a major function of the NFE, a particular service or a product, or a federal award. Okay, so you need to know what your cost objectives are. Examples. Maybe within your organization, you have separate divisions. In EWDD, financial management, workforce, we have economic development. So I know already that a cost objective is to track all the costs by division. So that division is a cost objective. Yeah. And this for sure, if you have more than one funding source, you definitely have to have your different grants as a cost objective, whatever you're getting from the city. Okay. Meaning everything else needs to end up into this cost objective when that allocation process is over. You may be required to track program activities. And like I just said, WIOA, they need to know work experience. CDBG needs to know micro enterprise technical assistance. Those are cost objectives. CARES Act needs to know small business assistance type of programs. And other required grant cost classifications. Like I said, you need to know this beforehand. Maybe you need to keep track of functions. A big one for workforce is this. We definitely have to keep track between admin and program costs because there is a cap usually on admin. And that is something that I will not really dig into because not all attendees would have that cap. So for WIOA service providers, we are not going deep into that. What's the admin cost for WIOA regulations? Because we have CDBG and CARES Act and other non-WIOA attending the conference. Okay, but you guys know what that is. It's a big deal for WIOA Department of Labor grants. Intermediate cost objective, which is a cost objective that is used to accumulate indirect or service center that you are then subsequently going to allocate to one or more final cost objectives, meaning you're like parking it. You know, you're accumulating common costs that you will then allocate to their final cost objectives. That's what that means. To me, I remember as a parking lot. Okay, I'm going to park it there first. Your final cost objectives, it's a cost objective which has allocated to it both direct and indirect. And in your organization accumulation system, it's the final accumulation point. Your intermediate cost objectives, you call them cost pools. They're cost staging areas. Okay, what are those examples? Maybe training services, maybe business assistance services. WIOA, they need to keep track of core services. Or maybe you have to have an indirect cost pool. But that's not the end of it. Right now, you're just cost pooling them. You're staging them there for a subsequent final cost allocation. Your final cost objective is what they call final resting place. Okay, doesn't sound too...
It's gloomy. That's a gloomy term.
Well, you know what that means. It's a final resting place. That is the end. There's no accumulation after that. That's what that means. Your final cost objective.
It's permanent.
Permanent, right? What are examples for those? Your funding sources, WIOA adult. your CARES Act funds, okay? CDBG, LA County Youth at Work, that's a big grant that we have. And that grant alone is 9 million. Okay, those are your final cost objectives. You must be consistent with your organization's established cost allocation procedures. You cannot be changing that methodology every time you don't like what you see once it's allocated. Okay, we're going to have an example on that. That's a very common finding. The final cost objectives must be established in order to meet grantors' reporting requirements. I'm repeating that again over and over. Again, audit trail. Any questions so far? You guys are quiet. My chat is quiet. Yeah.
So far, so good.
So far, so good. Okay. Thank you. Measuring benefits received. It's to determine the fair and proportionate share. Okay. Fair and proportionate share using an allocation base that represents a fair measure of your benefit and results in equitable distribution of cost. Now, keep this in mind. It must not be burdensome. We talked about this slightly yesterday. It must be applied consistently. So I'm going to highlight that again. Fair and proportionate. Okay, it's a measure of benefit, and it shouldn't take too much time tracking it that it becomes burdensome, that it defeats the benefit of you cost pooling to begin with. So don't have cost pooling where it's just taking too much of your time. Try to use something that you already have, like expenditures, your salaries, your FTEs, number of youth, something that you already have and you can easily use as a way to allocate your shared costs, okay? This is what gets most organizations in trouble with the cost allocation finding, right, Edwin? Always. Yeah.
Always. Yeah.
Yeah. So if you are unsure, please revisit your cost allocation plan to make sure that you guys don't run into an Edwin finding on cost allocation. And I'll explain why. Costs that do not benefit a particular cost objective are not allocable. And what did I say about must?
You have to do it.
You have to do it.
No exception.
When you see should, it's a recommended best practice approach. But if you see must in the regulations, you have to do it. No way around that. Okay. So anything that doesn't benefit a federal award or city contract must not be charged to that cost objective. We've seen that a lot. And say, why is this being charged to me? Like, how did I benefit from this? Yeah. What are the different types of costs? Direct costs are usually the easy ones, right? You can identify specifically which cost objective is benefiting from it. And you're working directly on WIO or you're working directly on small business grant program for CARES Act. No question about it. That's where your time was dedicated, where that expense was used. Okay, examples. An accountant's salary is preparing WIO financial reports. That's direct. Okay, are you guys keeping track of that? Okay, if you directly charge me that, I'm going to ask for that accountant's timesheet. A consultant working exclusively maybe for a CDBG funded project. Let me see the invoice. Okay, how did this benefit my CDBG business source contract? Okay, you got to have that in place. Maybe supportive services for a participant enrolled in a youth program. Okay. Those are easy because you have to enroll them in different youth programs. So the supportive services that they do get will then be a direct cost, a direct charge to that funding source, to the LA County Systems Involved Youth Program in this example. Or maybe expenses incurred for an outreach event for the Comeback Checks program. This is our new program that we're also proud of, that just launched. Maybe you had a group who were doing outreach for specifically that program. So that's a good example. Shared costs, they're not indirect, but they're costs benefiting your programs, but it just takes too much time to actually keep track of them. That's why you call them shared, okay? Because that means you're going to pull them and then allocate later. So the definition is costs that cannot be readily assigned to a final cost objective, because if you do, it will just not be too efficient, or it will take too much time or too burdensome, but which are directly charged to an intermediate cost objective, your staging areas. Remember, you would park it there first to subsequently allocate to your what? What's the term they used?
Final resting place.
Yeah. The gloomy final resting place to eventually end up there. Okay. They're not indirect. Okay. That's the difference. They're easier to assign or allocate them based on some measure of benefit. FTE, space usage, then to assign them directly to, you can, because they benefit the program, it will just take too much time. So you got to make that decision. Maybe I should just pull this instead of directly charging and not spend too much time tracking my time. Examples, maybe you have a pool of case managers who are all working with participants enrolled in different programs, right? Instead of them, okay, I spent 2 hours on Stacy, 5 hours on Yvette, you will just pool all their time and then you will allocate to the different youth programs, maybe based on youth enrollments, youth placements, and it's really up to you to determine what that best base should be. Fees for a consultant who provided technical assistance on federal grant regulations. Maybe space costs for computer rooms used by your clients seeking services from various small business relief programs. Okay, these are just examples. Indirect will be the more exciting stuff. These are costs incurred for a common or joint purpose, benefiting more than one cost objective. And that's really why you're putting it as an indirect cost pool, because it's benefiting more than one, because otherwise you would just have directly charged them, right? And they are not readily assignable to the cost objectives without effort disproportionate to the results achieved. And it's just to facilitate the equitable distribution without spending too much time on it. Indirect cost pools must be distributed to the benefited cost objectives on basis that will produce an equitable result. It's pretty much saying the same thing that sometimes you would have a central office. We see a lot of organizations where, our accounting, our exec, they're in a separate place. So that's an example of indirect cost that you can charge the grant because your organization is really benefiting from that centralized place, right? Where you have mostly your administration stuff. So those are examples of indirect costs. They are generally incurred to support the overall operation of the organization, but for which you cannot establish a direct relationship without spending too much effort. And for the most part, you charge back the grant by using an indirect cost rate or by direct cost allocation. And we will go through that. That's a change in the regulation, actually. If you choose to just cost allocate instead of an indirect cost rate. It's a new change. Now, for those of you who are Institute of Higher Educations, universities, and major nonprofit organizations, I think regulation defined major nonprofit will be like what, 10 million and above, Edwin? So for these organizations, you actually have to group your indirect costs between facilities and administration. That's a requirement, except for Mary. Most of you would not need to know this, but maybe we have some in the group. And these are just examples of what those are and how you would classify them. So anything related to facilities, depreciation, maintenance, that's facilities, and everything else would be under admin.
Yeah, so that's what they call our indirect costs. They call it F&A.
F&A, yeah. And that's because it's UCLA. It's a major institute of higher education. They have different requirements for them. Okay. And I put here the appendix where you would see that, just in case there's some of you who would fall under these categories. Okay, Appendix 3 and 4 is where you will find more information on this. The slides are actually a very summary of what's in the regulation. I'm giving you the citation here. You see a slide here for 2 boxes, but it's like 3 pages, right? So you can understand my last 7 days reading through regulations. That way I can summarize it for you. Looking this way, it's not too much to read. But if you do want to see the details, if there's anything else there that might not be on my slide, because I didn't think it'd be applicable to all of you, please go ahead and check the citation, okay? ecfr.gov is where you will find all the regulations. A cost should be treated, oh my God, wrong spelling. Please correct that consistently with other costs incurred for the same purpose in like circumstances. Okay, you should be consistent with that. A cost may not be assigned to an award as a direct, okay, if it has been allocated to another award as an indirect. What would that be, guys? I emphasized this yesterday. If you do that, what is that?
Dipping.
Double dipping.
There you go. Only Mary was brave enough. Double dipping, Catherine. Some of you were just kind of mumbling. Don't be afraid. I mean, Double dipping, meaning you charged me directly, but you kept it in your indirect cost pool to then allocate to everything else. You double dipped. And we see that. They charge us, for example, for an accountant's time directly. And then when we ask, can we see your indirect cost pool? And we see the same accountant there. You just charged me twice. Indirect cost charged as direct cost. You can actually do this. If directly related to a specific award, certain costs that otherwise would be treated as indirect may be considered direct costs. That sometimes happens. You just need to be able to document it and make sure that you're not, again, double charging, okay? Examples. Accounting staff directly involved in disbursement of funds to small business grantees. CARES Act program, for example, did not allow the use of indirect cost rate. Most federal agencies would, if they have an approved rate, you can charge the grant. CARES Act did not, it was very specific. You cannot charge me admin and use an indirect cost rate. But if you have anything in your indirect cost pool where you can show that it directly benefited the CARES Act, you can then charge me for that, even if it's an admin cost that would have been normally part of your indirect cost. And that's really not new for CARES, even in the regulations. As you can see, it's in subpart 413. So there may be instances where something in your indirect cost pool you pulled out to specifically work on a program. Just make sure that when you spread your indirect cost pool that you took it out. Okay, that's the only thing there where a lot of agencies get in trouble. They have it in both places. Extraordinary utility consumption. This is actually an example straight from the regulations. Cost of materials supplied from stock or services rendered by specialized. And program evaluation was actually a new addition in the regulation. They added program evaluation, which I guess would normally be part of your indirect cost pool or admin. That is a good example that you can charge as direct. The feds actually added this example. How are we on time? 10 o'clock. Maintain adequate supporting documentation. Okay. For salaries, we will be looking for timesheets that show the actual hours worked for a specific grant. How do you keep track of your time directly benefiting a specific grant? For us, for example, we have a work order number for every grant. And so if I'm working on CDBG, I'm going to use the CDBG work order number. That's how you keep track of direct charges. Your timesheet is what Edwin will be looking for. Consultants, you must have invoices. But how would I know that the services benefited my program? Usually for you guys, you are asking for, I hope, activity reports. At least that's what I see from most of our professional service agreements, where it's not just an invoice, there's an activity report. If you don't have that, we will probably ask, how do we know what this consultant worked on? Okay, put everything there. That way, when an auditor asks, you will have it and you're not sweating, trying to remember. Just put everything there. Okay. Federal grants generally allow indirect costs if in accordance with the uniform guidance, but CARES did not. Okay. CARES Act did not allow the charging of admin costs using an indirect cost rate. And this became an issue. For example, our LA Community Corps work source centers. I think the list is here. The Treasury issued in January. The CARES Act, we did not get that grant directly. It's a grant that went directly to CAO. So we're also waiting for instructions from CAO and then passing it on to our agencies when we know. But remember, the pandemic year was just an extraordinary year. I mean, the focus then was just disbursing those funds as quickly as we can. So I know we kind of fell behind on regulations, but that was just how that was during that pandemic. But the CARES Act regulation, though, did say what I just said, right? However, if you have anything in your admin indirect cost pool that you can show that it directly benefited the CARES Act program or your LA Community Cares program, then you can charge it. For example, you've got accountants who were processing those disbursements to small businesses. You have a monitor who's providing monitoring oversight. That's normally would have been in your indirect cost pool. You can charge those. The regulation's not saying that you can't. You just have to maintain documentation, which is really not new as far as federal awards is concerned. You always have to maintain documentation anyway, right? Any questions on that one? Again, with adequate supporting documentation, and as long as those costs were not already charged to another federal award, they keep repeating this everywhere. As long as you're not double charging, that's what they're saying in this bullet. What are cost pools? 1005. Costs that may be pulled are limited to shared and indirect costs. The allocation of cost pools should not be burdensome once the methodology is developed. Okay. There are many types of cost pools that are acceptable, and it's really up to your organization what type of data that you can actually keep track of. You have to look at your organization, and then you need to describe that in your cost allocation procedure. Okay, what are you using as allocation base for space, maybe for that reception area, right? For the accountant's time, for payroll group, what are you using? That has to be described in your cost allocation plan. One of the things that we ask for right away is your cost allocation procedure, your policy, once we go there. Although your program monitors should be asking for this at the budget negotiation stage even. If you guys do it at that stage, it just prevents or minimizes all kinds of issues that we see during the fiscal monitoring if you guys look at this at the budget stage. Okay?
Catherine, I have a question.
Yeah,
So if we,
I can drink.
yeah, have a drink. What's in that, Catherine? What kind of a drink are you having?
Do I have to disclose that?
That's an allowable.
Your tea.
That's an
My mom-
allowable drink.
I know it's allowable.
That's an allowable drink, Mary.
I'm
don't
here.
worry.
My mom's ginger tea. Just save my voice. My God, Mary, you put me on the spot. Go ahead with your question.
So if we use, say we allocate costs based on participant enrolled, right? And we use it for space, do we use the same formula for paper, for instance, you know? So we use it, once we've established what our base is gonna be, we use that for anything that any shared cost.
You cannot just have one cost pool and then you allocate all that based on youth. Because for another cost pool may have nothing to do with youth participants. Right?
Oh, okay.
Different cost pools and then use the most appropriate base for that. Okay.
Right.
I doubt it that one cost pool and location base would be enough for most of you. There has to be a relationship between what's in the cost pool and your allocation base. That way it's actually a measure of that benefit. There has to be a relationship there. Okay.
But in our case, we just do youth. That's all we do. Now we do different programs for youth, but we don't.
For example, your training room, it's reasonable to use the number of youth enrolled to allocate that because those are the using that room. That's perfectly fine. You may have another cost pool, for example, of your accountants, maybe processing invoices for your organization. That has nothing to do with your number of youth participants.
Yeah, okay.
Now that has to be a separate cost pool that you then maybe charge through an indirect cost rate or whatever base you may have, but not youth because it wouldn't be a fair measure of the benefit from that accountant's time.
Yeah, I got you.
Okay. Hopefully when I do the examples, it'll be a little bit clearer for some of our program folks. What are examples of cost pools? You may have intake cost pools. I usually see an admin support cost pool where your accountants are, your payroll folks, your receptionists, sometimes even the executive are in this pool, but usually I would see an executive management pool separate. Or you may have an indirect cost pool that you will then use an indirect cost rate for. I see supplies expense. Okay, so really depending on your organization, what allocation base do you choose to then allocate your pool? So allocation base is a mechanism used to measure the extent of the benefits received when allocating cost pools to multiple cost objectives. It's a mechanism. The general criteria would be there has to be minimal distortion, meaning it's not an exact amount, but it shouldn't be so far off from what the actual benefit was. Okay. General acceptability. It represents actual costs or efforts expended. Okay. Timely management control. It's consistent with variations in your funding. I'm getting text messages. Materiality of costs involved and practicality and cost of using the base. Okay. Actual conditions must be taken into account in selecting the base. Commonly used unacceptable allocation bases. This I see a lot of when they use something that's unacceptable. What are those examples? level of funding. Some of you are allocating your cost pool, for example, based on the amount of grants that you have. That's not okay. For some of you, may be allocating based on your budget. I have a budget for this amount in here, and that's how you allocate them. That's not okay. Budget FTEs are not adjusted to actual hours worked. And what's the key word here? What makes them unacceptable? For all the ones where I have excess next to, what makes this basis not acceptable?
Everything is estimated plan, not actual.
Everything is budget, funding, planned. And I hear this a lot. Why did you allocate this way? Oh, that's how we have it in the budget. When you allocate, it has to be based on actual results. It's okay to use estimates when you're working with Jackie or Tony. Is Tony here? Tony?
Yes, I'm here.
Yes, Tony. Did you get my email?
I just read it. Yes.
Okay. So you can do that when you're working with Tony or Jackie while you come up with your budget, right? I'm charging you this much for my space, Jackie, because for our cost allocation estimate, this might be my share for this program here. It's okay at that point. But once you start billing FMD, once you start sending that invoice to me and Edwin asks, how did you come up with 2,000 as my share of your rent? That allocation better be based on actual numbers, not budget. Okay, that's where you guys get in trouble a lot. Or
question, Catherine. Sorry.
Yes. Yeah.
There's questions.
What if someone works an actual over 8 hours, but they are salaried, not overtime? Whose question is this? Alba?
Hi, Catherine.
Yeah. Hi, Alba.
So yeah, we have salaried staff. And so for us, that has been an issue in the past because, you know, with salaried staff, sometimes they work over 8 hours and sometimes they work less. But the point is that they're supposed to deliver, you know, the deliverable. So the issue that we've had in the past is that they will work over 8 hours on one day, but we're not able to expense that to CDBG because it's over 8 hours. So I think that's where I'm asking, like, if a salaried employee works, let's say 10 hours in one day, but technically because they're salaried, we don't want to, you know, they're not qualifying for overtime. Can we still expense 10 hours in one day, or let's say over 40 hours in 1 week, but not pay overtime?
You will only charge the grant on what you actually paid the employee.
Okay, so we could charge over 8 hours, and it doesn't have to.
If you paid that employee overtime, then it's a question for Jackie, can I charge overtime for this person? But the question is, because they're salaried, even when they work over 40, you're not really paying them for overtime because they're salaried. Say they work 42 hours. You can only charge me 40 hours because that's what you paid them. You cannot charge me the 2 hours that you did not pay them, even if they actually worked it.
Okay, that's helpful.
I'm salaried, for example. You know, last week my work hours was 110, I think. Just for the record, preparing for this fiscal training, I will only get paid for the 80, and that's what I'm going to charge WIOA CDBG is the 80 hours that I got paid for, because that's what I got. Okay, that's what the grant paid for. I did not get paid for the excess. So I think it's the same situation here.
Yeah, I think the issue is because the hours fluctuate, but the pay stays the same because they're salaried. So that's where it becomes hard to, when we're recording actual hours, it becomes difficult because let's say they did work 6 hours, but we still have to pay them.
Oh, that's when maybe I should not hear that.
No, well, we're not doing that, but I'm saying
I know.
As an example.
So in that example, you pay them the full 40, even if they actually just work 38. And that's fine, because that's actually what you pay them. In your employee handbook, that person is salaried. How do you track your time? By work order number, by funding source?
By work. Well, we have a specific, CDBG tracking, but then within our CDBG contract, we actually have specific clients. So we have to assign it to each business. So because they have a specific budget per pet.
It will just be a distribution of that person's 40 hours then. Because regardless of whether they work 50 or 20, they will get paid the full 40 because they're salaried employees.
Is that because they're 100% on the contract? Sorry, I work with Alva. Sorry, that's why I'm jumping in.
Even if they're not, it just means if you have multiple funding sources, you're just spreading that 40 hours to all the funding sources. That person will get paid for the 40 hours no matter what. Did they answer your question? So it doesn't necessarily have to be for that person to be just working on one contract. Chances are this person is working on multiple programs. That means that 40 hours that he was paid for, even if he actually worked 20 hours, which I don't want to hear about, it then spread to all the different funding sources. Okay.
I think I'm confused because we need to track that. We need them to track their hours, right? So we have the record of their hours when you guys ask for it.
So that's probably an internal thing that you got to make sure that you have accounted for the 40, so you don't run into an audit issue.
I have a question, Catherine. If we do it the other way around, let's say that we have a salaried employee that works 40 hours a week. And let's say that the employee gets paid $1,000 a week. The problem in trying to allocate a salaried employee is if that employee actually works 60 hours and still gets paid $1,000 for the week, you really have a difficulty of charging half of his time to each grant if indeed he worked 40 hours on one grant and 20 hours on the other. And so I think the cost allocation plan has to basically say, if you're salaried, I'm going to split your salary 50-50. And if you work extra hours on one grant, it's not charged to anything. It's just a free work, because you don't want to charge different salaries on a grant if the person continues to work 20 hours a week on that same grant every week. And so the percentage changes in terms of percent of effort, but you don't want to change the other hours.
The percentage change, but the total amount doesn't change.
Right. And so I don't know how to actually keep the time card. If the guy works 60 hours and he says, I worked 40 hours in grant 1 and 20 hours in grant 2, I really don't want to show that anywhere. I want to just show that you're salaried and you work 50% on grant 1 and 50%.
Right. But that's what we do. I may have worked 30 on one grant, but I'm only going to charge 25. Right?
Exactly.
That's all I'm going to be paid for. Okay.
Yes, I just want the time card to reflect what you're getting paid.
Yes.
And if you're salaried and you worked a couple of extra hours, thank you very much. Here's a cup of coffee.
And even the hours that you worked for that you never get paid for, you can't even put that as stand-in cost because you never pay the employee. I think what this is more is a fair labor standards.
Yep.
Than a cost allocation, right?
That's correct.
Can I say something? I think it was Ron that was talking. Ron, I use what's a personal activity report for the salary people. So if you want, I can send you the spreadsheet that I use that gives the percentage of what to charge per program. So,
Can I have that too? This is awesome.
Absolutely. So I tell you what, I will give everyone my email. I'll put it in the chat, and anybody that wants it, I will email it to.
Is that a monthly percent of effort, Kenneth?
I do. Yes, it's based on a monthly percent of effort.
Yeah, I do. I've done the same thing in terms of percent of effort at the end of the month, but I actually got challenged once, and I don't remember what the resolution was, but it's hard to put hours per day as opposed to at the end of the month, you get paid as a salaried employee, so you don't really have to keep your hourly time card.
Oh, wait. You will run into an Edwin issue if you're supposed to be tracking your time daily.
Right.
Yeah,
Right.
not at the end of the month. So there has to be like a daily timesheet that shows that. Not at the end of the month where you're trying to remember, did I spend 40% on this? No, that's not how that works. Okay.
And that's what Kenneth is talking about, the personal activity report.
Mm-hmm.
Yeah.
Okay.
What Kenneth's saying, I have an activity report where this week I spent more on this one and 20% on this grant. He's tracking it, right? That way, at the end of the month, you know there's a percentage of effort on how much to charge. I have a problem with at the end of the month, maybe bi-weekly. That's how they're tracking their time. And that's fine if that's how your timekeeping system is. But you better be able to produce that when Edwin questions, why did you charge me 30% for the salaried employee?
Yeah, I think our department uses percentage of time because we get paid twice a month. So the hours per pay period vary each pay period.
For an organization as us, we're tracking our time daily.
Yeah.
Like this one, my time for training you guys is going to be a cost pool because it's benefiting so many. But I'm going to be tracking my time today and not at the end of the month. Not even at the pay period.
when you track your time today, you report 8 hours, and then those 8 hours are shared costs based on a cost allocation, right?
Yeah, my time will go into a cost pool. Yes. Yeah.
Yeah. So that's kind of my question about our salaries for youth. Say we base it on the number of participants enrolled, and we use a cost allocation. Then my staff doesn't have to keep track of their time, right?
Exactly. For example, for my time, okay? It's a perfect example. I do have worker numbers where I'm keeping track of WIOA, LA County, right? But maybe 2 days of my time is spent fiscal training, right?
Yeah.
So that 2 days will be in a cost pool, okay?
Right.
Then get allocated later based on whatever base is acceptable for my time. So I'm partly directly and I'm partly cost pooling, and that's fine. And that's really the right way to do it.
Okay, but for the most part, our case managers are always cost pooled because they're always dealing with a variety of.
So that means they're not tracking their time on which participant they're serving, and that's because doing so would be so what? What's my word? Would be so burdensome.
Yes.
If you have case managers and you have hundreds and thousands of youth, you can't possibly be tracking their time. So a more efficient way of doing that is pooling their charges. I hear my name.
Okay. Gotcha. Thank you.
Did somebody say something?
Yeah, well, there's a few more questions.
Okay. From Frank Meir. The allocation for the staff may change week to week. Yes, that's true. In fact, when our antennas go up is when we see an allocation that's the same every week. I mean, are you really tracking? Because I see here it's the same time every week. Because normally you would see variations, right? So Frank is right. Functional timesheets are required, I believe. Functional, meaning based on tasks. Is that what you mean, Grace?
Activity,
What kind of activity you're doing? Yes, that's actually one of the cost objectives that you may, especially for WIOA, for example, where you have to keep track of who's doing financial reporting and who's doing case managing. Maybe that's how you track your time based on tasks or functions, so that then you can differentiate how much of that person's time should be reported to WIOA admin and to WIOA program. Yes, that's a good example.
Yeah.
Okay. Wow, you guys cause for a while there, I thought I was, by myself because I had no questions. What slide am I now? 27, and I still have no questions. So I'll send you guys on a break. We are not done with cost allocation yet. Okay, not quite. So let's log back in at 10:45.
Thanks, Catherine.
All right.
Thank you.
Be back on time. Yeah, I'm gonna exit out. Okay, we are good. Back to allocation basis. Did I ever finish the one before this?
I think we did.
Okay, so actual conditions, I think I did this already. Actual conditions must be taken into account in selecting the base. Now, what are the unacceptable allocation bases? This is where we stopped, okay? None of these planned, estimate, budget, basis for allocation, not acceptable. Okay, I see this a lot. You also cannot use results or data from the prior period. Your allocation base must be data from the carry, where the cost pool that you're allocating actually belongs, when you actually incurred it. They have to be from the same period. Examples, you can use inputs, number of employees, direct labor hours, space usage, or outputs, meaning actual expenditures, maybe the number of placements you've made, number of unit products that you've produced, number of participants served. Those are just examples that I could think of. Any questions? Again, it must be based on actual numbers or results. Here's a quick illustration. The type of your cost will be in this column. And then you have your intermediate cost pools here, your cost staging areas. Here is where you have your allocation basis, if any, if you need it. and then your final cost objectives, the final resting place. So these are your costs. You have direct, you have shared. Again, shared are not indirect. They're actually shared direct costs. Okay, because your indirect would be down here. And in this example, my final cost objectives are my funding sources. For me, who's a grant-funded department, my final cost objectives are always my funding source. Might be different for you, but at least somewhere in your allocation system, that my grant better be a final cost objective somewhere so that you can have a basis for what you're reporting to the city. Examples of direct consultant fees, maybe that's used by a business source center. So that means that's going straight to where? Jackie. Is Jackie late? Okay, that's going straight to CDBG. It's a direct cost, no question about it. You have activity reports. You have an invoice from the consultant showing that the services were for the Business Source Center CDBG funded program. Okay, maybe participant support costs, incentives, stipends that you gave to your participants for the LA County Systems Involved Youth, maybe. Okay, meaning they're directly given to the participant. That's an example of a direct cost to Mary.
To the final cost objective.
Which one?
Oh, it's the LA County.
Yes, very good, Mary. This one, it's a direct cost, right?
Right.
So those are easy, okay? But sometimes doing direct is not easy, right? It might take too much effort. So that's when you pull them. For example, I see this a lot. They're counselors. They serve so many participants, they will just pull all counselors' time. In this case, I made it simple. Maybe all your counselors for WIOA, adult and dislocated worker, you want to pull them. And I'm going to call them core services pool because I need to keep track of core services. And maybe for this pool, I'm going to allocate it based on the number of participants registered, because it doesn't matter whether I place them or whatever. As soon as they register, I'm serving them. So in this example, I'm going to use number of participants registered between WIOA, adult and dislocated worker, then allocate it between these two. And that's a methodology that I will consistently do for every period. Maybe you have case managers for 2 youth programs. Okay, I'm going to pull them as my, for example, training services. But this one, I'm going to pull them according to enrollments, because until they are enrolled, my case managers are really not working with them in this example. And I'm not a youth program expert, so this might not be exactly how it is.
No, that's right.
So that will give me the base to be able to allocate their time to this. Yeah?
Yes, that's correct.
Very good.
But here would be my question though. When we do a budget, we make an estimate of how we're going to allocate that time. All right. And then we put it in an intermediate cost pool, and then we do the program, and so we know how many participants are enrolled in each program, and then we divide up the salaries based on the number of participants into our final cost program. So we would kind of have to wait till the end of the year then to do that cost allocation, right? Or whenever we've enrolled all of our kids. Am I getting it correctly?
So for example, you're reporting for December, and maybe you might not have your December number of participants at that time.
Well, that wouldn't be the final number. It might be an interim number. Yeah.
And it's fine. So you can make 2 decisions. Are you going to allocate it based on your number of participants for that quarter, maybe?
Oh, I see.
Or are you using cumulative numbers? For me, it makes sense to allocate it based on the number of youth participants that were registered for that period, because that's really where they spend the time. I know for us, our allocation base is always cumulative. That way,
yes,
if there's any highs and lows during the fiscal year, at the very end, that base is based on the cumulative actual data at the end of the fiscal year.
Yeah.
Now, if you say, for example, June 30, you're about to close, you don't have June 30 numbers yet. Catherine wants to report by June 15. I only have youth numbers as of May. You may use May so that you can report. But once you get that June 30 number, if you need to adjust, you adjust.
Okay. Got it. Thank you, Catherine.
If we overpaid you, you pay me back. If we underpaid you,
we're in trouble.
You're on your own.
Yeah, I know that.
Unless, of course, we haven't closed the grant and we actually can still revise your report, then you can say, can we still revise my number? But sometimes it's too late.
Yeah,
So
I
just
understand.
nice to remember that FMD usually accommodates if we can, but sometimes our hands are tied if we close the grant, which is always the case for LA County. We have to close the grants every year. So the closeout is the closeout. Okay, we usually can kind of go back once in a while, as long as we still have the extension from the state, but not too often. CDBG, we may have a little bit more time because the deadline from housing is a little bit more flexible. So those deadlines are always driven by how much time we have to actually prepare our reports. City programs, we may have a little more. CARES Act, though, is closing. We are closing the grant December 31st. LA Community Corps agencies, there's going to be a directive coming out from FMD. Chances are your contract's ending December 31st, your closeout deadline will probably be January 15 or the 20th, because we have to report to the CAO's office by this date. I don't know that date yet, but it will be driven by the CAO's deadline to us because they have to report to Treasury, unless there's something more restrictive about CARES Act, just because it's such a special grant. But in a normal cycle, that will be the usual instructions. So LA Community Corps CARES Act funded programs, we are closing soon. Okay. That way, in case that directive is late, you know you're going to be asked for a closeout in January, meaning only for your expenditures through December 31st, not unliquidated financial obligations. Okay. Sheila has a question. We can use CalJOBS enrollment reports. Yes. And something like that, it's actually from a system is better than something that you're tracking manually. We do that, actually. We ask for data from our MIS folks to look at certain things, and those are actually more reliable. And it's something that you don't have to recreate, right? That you don't have to keep track of separately. It's already in your system. Okay.
There's a raised hand, Catherine. There's a raised hand from Celerine.
Celerine? Hi, Celerine.
Hello, hi. It's pretty much a general comment around using the number of participants as an allocation base. And this is really based on experience with the EWDD contracts. They come in at different times and we don't know exactly how many participants will be serving in each for each grant. So which then really complicates using that basis as an allocation base. And also some of the contracts, when we receive them, they are heavily participant based. I mean, we have to spend more money on participants than on personnel. So we have to come up with the different allocations to make sure we reach those minimum spendings for participants costs. So this will, even if this will be a perfect method to use really for allocating salaries, when we're allocating personnel, we do have different other constraints we have to really take into consideration. So, but I think if we could improve on the timing of contracts renewals or awarding those contracts, and also know beforehand, you know, the allocation to participants and to personnel, this will be a perfect allocation base.
Yeah.
Just to comment.
Yeah. And that's a perfect example where you may have to use a different allocation base for a different pool, especially when that direct relationship is not really there. What Selena is saying, that some of those personnel may not be driven by the number of participants, maybe. So that's really where you kind of look into those bases based on your individual organizations. Okay.
Well, or Catherine, the number of participants, the effort involved in the participants, and I think this is kind of what the gentleman was saying, is different. For instance, we owe participants, we serve for 12 months and they're much more labor intensive. We provide more case management, more other services. The participants in LA Youth at Work.
Yes, I know what you mean. And for me, that's also the hesitation with me using number of participants as allocation based, because it's almost like you're treating them equally, like as if it takes you the same amount of time to treat.
And it doesn't, yeah.
Some of them are harder to serve and therefore you put more hours on them. I think for those cases, especially if that really drives the allocation significantly in a different direction, I think you should be tracking the actual hours spent by the employee to serve that youth. that's harder to serve. But then again, you kind of have to balance how difficult is that.
That's very difficult.
That is the difficulty with using participants, is as if they're all equal.
Couldn't we develop a formula where we say, okay, so we serve an LA Youth at Work participant for 2 months, but we owe a participant for 12 months, and you know, weight the participants based on the intensity of service or the length of service.
See how difficult that would be. Again, shouldn't be too burdensome.
Too burdensome. Okay.
And maybe it may have been easier for your employees to just track their time on who they're serving, you know.
No, but that's crazy.
I know.
I mean, if they're doing a workshop, are they supposed to count? Okay, in this workshop, I have 20 kids.
For somebody who's doing a workshop, for example, maybe you need to cost pool that. And the allocation base is really not meant to give you an accurate number of what that best.
No, okay.
It should just be a fair measure of the benefit. If it's meant to be an exact amount, then it should have been a direct cost, right? But you're allocating it, okay? So for indirect costs, a good example will be your central office for your payroll, accounting, procurement folks. You're gonna pull those as an indirect support services pool. Or maybe you have your executive directors, your CFOs, your vice presidents, and maybe an executive management pool. You decided then that for your indirect cost pool, I'm going to apply for an indirect cost rate, okay, for this pool. You can then charge them to all your funding sources in this final cost objectives. So those are your different examples of what your staging areas are, your cost pools that you are allocating based on. See how I don't have one allocation base? That's a perfect example. You may have different cost allocation bases that you may have to establish so that you can then go to your final resting places. Yeah. I know it's kind of simplified, but if I make it too complicated, I might lose some of the non-accounting folks. So there's a reason why I made it simple like this, but that's the idea of the cost allocation. Any questions, guys? Your cost allocation plan is a written plan that identifies allowable, what's direct and what's indirect, and what are your allocation methods to accumulate and assign this cost to your cost objectives. That's what should be described in your cost allocation plan. Your program monitor should be asking for this at the negotiation phase. Elements of a cost allocation plan. It would usually show your organizational chart, the background and mission statement of your organization, the types of services that you provide. It would have your financial statements, what shared expenses are to be allocated, what methodology are you using to allocate those. Those should be described. And it should always be certified by an authorized official. The regulation says no lower than a vice president or CFO. Okay, so you cannot just give Edwin a narrative of something and it's unsigned. It has to be certified. So be careful, but my retirement party, there was actually a video that they presented of me conducting a training. I think I have said it so often enough at every training that it actually went into my retirement goodbye video. Right? So instead of me repeating it all over again, let me just play it for you. How's that? If I were you guys, if there's one thing in your financial management system that you don't want auditors to be questioning, is your cost allocation system. You don't want your cost allocation system to lose its integrity, because then what happens? Everything that you're cost allocating gets questioned, because now you've lost their trust. Oh, you say you have a cost allocation procedure, but you're changing it whenever you don't have money here, there's the problem there, there's a restriction there, I move it there. Now I've just lost trust in your cost allocation. Let me run it for you so I can see what my fair share is. Did you guys hear that? Do I have to repeat that again? I've said it often enough that even my husband, who's in healthcare, understands cost allocation. It's in the FMD archive. Who was it who recorded that? But anyway, what I was saying in there is there should be no shifting of costs.
I have a question. This
Go
is
ahead.
Elba. Is there a cost allocation plan template available that can help us, fill in what is necessary and we avoid any that might be missing?
And maybe we can share the one from Department of Labor, maybe, Edwin?
Yeah, we have one for nonprofit, and you can email it to
Again, different for every organization, but yeah, use it at least a guide or
Guide for nonprofit.
for your organization, so you at least know what direction to take. You must remember that all activities which benefit from shared or indirect cost pool, including the unallowable activities and donated service, must receive an appropriate allocated share. For example, you have fundraising activities that's funded by maybe a non-federal source. That section of your organization must also take a share of the indirect cost pool because it's benefiting from, say, your accountants, your payroll exec. What it's saying here is you should not be shifting that section's share of indirect cost to something else, to another federal award. Cost allocable to a particular federal award may not be charged to another award or another program. Two, I usually see this where you're trying to overcome funding deficiencies. Maybe your other federal program does not have sufficient funding for you to fully recover your full cost. So now what you're going to do is what you can recover from there, you shift to another funding source. I've seen that. Funding from another grant is not sufficient to cover its full cost. So now you're kind of manipulating your cost allocation methodology because one funding source cannot cover its fair share. You're trying to avoid expenditure restrictions or limitations. So, for example, your WIOA has a cap on admin. So that means you can only charge up to 4% of your admin. Because I cannot charge it there, I'm going to charge CDBG because it has no admin cap. If we see that, that's an issue. Or you have another grant where it doesn't pay for indirect cost, for example. And I see those a lot for non-federal grants where, oh, we're only going to pay for your direct costs, but I'm not paying for your indirect. I see those a lot. So those costs that you cannot recover because of that, you have to cover with your own money. You cannot be shifting those costs to the city program, for example. Admin cost limitation is another example. Other reasons, sometimes costs that are already used as a match for one, and then you charge another grant, that's a no-no. So what I keep saying every year is you have to be consistent with your implementation of your cost allocation methodology, because once we see that you're not consistent, guess what? We are going to question your entire cost allocation system. So what I say every year, you have to keep the integrity of your cost allocation, because once it loses that and your auditor sees that you're not really consistently implementing what you say you would, they are going to question everything that you're cost allocating. Okay. And that's why agencies with cost allocation finding usually have a significant amount of question cost, because what happens? We're questioning everything. Now you have to prove to us what our share is, because your cost allocation methodology just lost its integrity to me. I cannot say that enough. Sometimes I would report to the board and they say, why does this agency have so much question cost? I mean, it's big enough that I had to report it just in case it becomes disallowed. And usually the answer is, oh, because we questioned their cost allocation. They didn't have a cost allocation for their salaries. Those are usually the things that we see. Have I emphasized that enough? Okay. So you better keep that in mind, okay? I don't want to see another finding on cost allocation. I mean, I really beat this topic because I don't want to see big question costs. The big question costs means they're harder or longer to resolve. We certainly don't want them. Okay. Indirect costs. We should be able to finish by 12. I think I'm okay. Indirect cost rates. Fun stuff. You can use the direct allocation method now. It's acceptable if your indirect cost pool consists generally of administration and general expenses. Or you could use an ICR, an indirect cost rate, instead of allocation. When do you not need an indirect cost rate is when you only have one funding source. That means you're directly charging everything. Or when you don't intend to charge indirect cost anyway. Now, when do you need a rate? When you have more than one funding source, when you want to be able to charge for indirect cost, when you elect to recover indirect cost through a negotiated indirect cost rate, and just to ensure an equitable distribution of that indirect cost pool to all your funding sources. How do you do that? You negotiate and submit an indirect cost proposal to, if you're a recipient, to where? If you're a recipient of the federal agency. Are you guys hungry?
To a cognizant agency.
Very good, Mary. Thank you, Mary. Cognizant agency for indirect
costs.
Yes, that's where you submit your proposal. Okay. If you have a pass-through entity, okay, that means you're a subrecipient. You submit it to
A pass-through entity.
your pass-through entity, okay? And this time, there's a relief in the regulations where you don't have to negotiate with every pass-through entity you have. Your pass-through entities can actually talk to each other, but that's a decision that they have to make. Any question on that one? That's a new one. To me, that's a big relief that we can actually do that. At least for you guys who deal with so many pass-through entities, I think that's a big relief. Different indirect cost rate methods, you could use the simplified cost allocation method, which is what I'm going to illustrate. That way it's not too complicated. It's usually just your allowable indirect cost divided by your distribution base. And that's your indirect cost rate. That's what many of you are using. This must exclude capital expenditures and unallowable costs, obviously. So here's an example. Mary, are you listening? Well, you don't care because you're so large that you actually have a separate cost allocation office, maybe.
Yes, yes.
So, okay, you can drink whatever you're drinking.
Okay, good. I'll go get it.
So indirect cost rate method is just a method to determine how much indirect costs each program or funding source should pay. In this example, say we have indirect cost pool consisting of your executive management, accountants, payroll, receptionists for $200,000. And you have decided that your allocation base would be direct salaries. Why? Because it's simple. You already have that data. You already have people directly charging to different funding sources depending on what they worked on. Okay, that's actually what we do at the city. It's so easy for me because I already have that data. And all I do is allocate everything based on that. Okay, might be different for you. So my indirect cost rate, therefore, is my indirect cost pool divided by my allocation base. 200,000 over $1 million. And therefore, I have a 20% indirect cost rate that I can charge to all my funding sources. Easy, right? Once you have that rate, you just have to charge that. So in this example, say I have 3 grants, okay? So I have a total grant of 3.8 million. And the direct salaries for each of those grants is as follows. There's my 1 million direct salaries, and that's how people were charging to my 3 funding sources. Okay, I will then apply my 20% indirect cost rate to each. So now I know how much indirect cost I will charge to all my grants. That means I've recovered my entire 200,000 from all 3. Very simple, but that's how it works. That arrow just shows you're going to be able to recover everything, okay? So for example, grant 1 says, I'm sorry, but I don't pay for indirect cost rate, which is usually not a federal agency, okay? So that means that 40,000 under grant 1, that would have been the share of grant 1. What do? Nancy, is Nancy here?
Assume that
Question.
For example, in this case, grant 1 will not pay for indirect cost. Chances are they're not a federal agency. We have a lot of smaller non-federal agencies who don't like to pay for indirect costs. What do you do with that 40,000, guys?
You have to eat it.
If you take it as a loss.
You have to eat it. And my message is, do not charge grant 2 or 3 for it. Grant 1, even if it does not want to pay for it, you should still allocate what its fair share should be.
Grants 2 or 3.
I'm sorry, is that Gary?
Yes, charging it to grant 2 or grant 3 is a great way to lose grant 2 or grant 3.
Mm-hmm.
Yeah, disallowed cost and audit findings that way.
Exactly. If Edwin is the monitor for grant 2 and he sees that you charged me, say, half of the 40,000 that you could not recover for grant 1, and then your auditor for grant 3 sees the same thing. So now your entire 200,000 just got questioned. So be very careful with that. The other slide is, for example, you may have some in your indirect cost pool of 200,000 that maybe 20,000 of that. Oh, you know what? I actually have accountants who were responsible for disbursing for CARES Act money. That's all they did. Okay. That means I'm going to take the 20,000 from my indirect cost pool because I'm going to charge CARES Act directly for the 20. And therefore, what's remaining for me to allocate to grants 1, 2, and 3 is what? People? 20,000 of my 200,000, I can directly charge to CARES Act money. And I kept my records. They have timesheets showing all they worked on for 3 months was the CARES Act. I'm going to charge CARES Act directly for that 20,000. How much do I then allocate to grants 1, 2, and 3?
180,000.
180.
180,000. That means you take the 20,000 out, then all you have to allocate is the 180, not the 200. Because if you allocate the full 200, what did you just do?
Then you're double dipping.
You charge your grants 1, 2, and 3 for the 20,000 that you already charged CARES Act for directly. Okay? Is that clear enough? I guess I want to ask the non-accounting folks, the non-fiscal folks, our program monitors. Christian, where's Christian? I met Christian this morning. I just put him on the spot. Christian, are you okay?
Yeah, he said hello.
He said hello. He's okay?
He said hello. Yes.
I'll talk to you later, Christian.
Understanding.
All right, that's good. So I'm not going to go through the other methods. This might be meant for bigger organizations, but just know that there's more than just a simplified allocation method for indirect cost, okay?
Catherine, I have a question.
Go ahead.
In relation to the indirect cost, and you're talking about where they're allocating, Tony and I have had a discussion where he has mentioned that there's supposed to be a split also between admin and program. In my case, I always believed that indirect cost was all admin. What's the best way of doing that?
I have a very simple slide on that one, but I won't dive into it because not everybody needs to break down admin and program, but it is an important thing. And you nailed it right there. I mean, if you don't break it down for a program where that's required, automatically everything in your indirect cost pool is considered admin. You're absolutely right. For WIOA, for example, and any city-funded programs, you're required to track your admin. Your indirect cost pool might have some program there that maybe doesn't necessarily need to be capped at that 4%. And that's why we ask agencies, okay, in your indirect cost pool, do you have anything programmed there? That way, not the whole thing is classified as admin. Because chances are, if it's all admin, you're going to get capped that 4% and you will not recover your entire indirect cost. For WIOA agencies, I know we go through that every year. We discuss that topic, but I intentionally did not go too much on this one because we do have CARES Act and CDBG and county folks in the room.
Catherine, one of the issues that I have encountered is sometimes we have agencies that put 100% of their indirect costs into just program. So that's where it becomes problematic. And so that's what we try to explain, that there has to be a shared cost.
If it's where the other way around, where their indirect costs, they put it as all admin, then that's fine. Because that's generally what they are. Then you're fine. Yeah. It's when they put their indirect costs as program. Now you ask them, why is this under program? Show me. Because in the Department of Labor regulation, if there's anything in your indirect cost pool that you considered program, needs to be documented. So in that situation, you absolutely need to ask why, because probably chances are they're trying to avoid the 4% cap. Okay. Usually from what I see, indirect costs are mostly almost admin, but sometimes they may have an IT person there who's serving program folks. They may have an executive director who's also overseeing program folks and not just admin folks. So the intent of breaking that down is that way the entire 100% indirect cost doesn't get capped.
Well, facilities could be programmed.
Yeah, exactly.
And that's part of your indirect.
And if that facility is in your indirect cost pool, and that's why I said break it down. That way, the program portion does not get capped by the 4%.
Yeah.
That's true. And we also have very few programs that have that don't allow for administrative costs, like the rapid response program.
Yeah.
That you can actually charge 100% to of your indirect cost to program, but that's very minimal. And we will normally provide you with guidance on that. But the rest of the grants, especially federal grants, you have to have a split.
Mm-hmm. Oh, rapid response, no admin at all.
That's correct. Yes.
So they should not have admin and then you charge it to program. No, I mean, they cannot charge at all.
Right.
Yeah. Right. Okay. There's a question. Grace Choi from PACE. Grace, is Johnson here?
No, I don't think he's here.
No.
Hi, Catherine.
Hi. He said he was going to be here. That's how I'm looking for him. Can unrecovered indirect costs be standing for WIOA programs? I get that question a lot. Chances are, if you've already reached the admin cap, it might not be. Because remember, and we're going to talk about standing costs later in the afternoon. If there's anything that's programmed in your indirect cost, then it might be okay to charge it as stand-in.
Okay.
It gets tricky when it's admin, when you've in fact already exhausted your 4%. That means you cannot add stand-in because it's going to get disallowed anyway because you've reached that cap.
You can use it for leverage, can't you?
Yes.
Or in kind or where, yeah.
Leverage, because it did benefit the program and you didn't charge the program.
Yeah.
Oh, that's good to know. Thank you, Mary.
You're welcome.
Unless the grant actually specifies what should be allowable as leverage resource. Because we do have programs like those where in their proposals, they're already asking, you must have leverage resources from this, and this. So that's quite possible that maybe indirect costs will not be acceptable for you to meet that leverage resource requirement for that program. So not totally a yes there.
Okay.
Yeah.
Thank you.
But it still has to directly support that program.
Yeah. And that's what's a leverage resource. It supplements, it complements that program, but it's another funding source. It's separate from stand-in, it's separate from match. And I think that's what they want to see is for all these different programs supplementing each other. So there's no duplication of services. I think that's, at least in my simple mind, what the intent of the requirement for leverage resources is. We want to contract with an agency that already has all these other programs going that can actually help with our WIOA program. Right?
Got it.
So again, if you're a direct recipient, you have to work with your federal cognizant agency. That agency is usually the one negotiating on behalf of other federal agencies. Not necessarily the same as your cognizant agency for audit. And it's usually the federal agency where you got the highest award, usually, unless these federal agencies that you have grants from agreed to assign one particular federal agency, for example. But if not, then it's usually where you got the highest award. For the city, it's HUD.
For UCLA, it's Health and Human Services because we get all those medical research grants.
So once an agency is assigned cognizance for a particular nonprofit, you're going to be working with that cognizant agency unless there's a shift in the dollar volume of your awards for a period of 3 years. That's how the cognizance is assigned. But all concerned federal agencies must be given the opportunity to participate in the negotiation process. But once they assign that cognizant agency, that is it. That is who you deal with. Deadlines, for those of you directly working with them, for first-timers, is 3 months after the effective date of the federal award. For all others, it's 6 months after the close of each fiscal year. The results of each negotiation must be formalized in a written agreement between the cognizant agency and the organization. So when you say you have a rate from the feds, we are asking for that agreement. We want a signed one. For subrecipients, you negotiate with your pass-through entity. It could be the state, the city, the county. For pass-through entities, we are required to honor the federally approved indirect cost rate. So for those who already negotiated with the feds, it actually makes it easier. Okay. If you don't have a federal rate, bless you. If you don't have if you don't have an approved rate by the feds, the PTE must then determine the appropriate rate in collaboration with subrecipient, which is either a negotiation between that agency and me, or maybe I'm going to see if you have an agreement with a different pass-through entity. That's so great that they allow that. Or you can elect to use the 10% de minimis rate. And there's a change here too. And I'll go through the 10% de minimis rate, but also the regulation now allows you, if you decide to just do a direct cost allocation. And remember, we talk about when this is appropriate. When usually your indirect cost pool is just general admin expenses, you can do this now. They will allow you. Now, the 10% de minimis rate, we have quite a few agencies who've selected to do this. Before, you can only do this if you've never had a federal rate, never. They actually changed that now, effective as of November 2020, where you could use a 10% de minimis rate if you do not have a current rate. Even if you've had a rate before, you can now select to use the 10% de minimis rate. So for those of you who did not qualify before to use this because you have had the rate before, you can now do so if you select to do this. No document is required to justify the 10% de minimis rate. However, costs must be consistently charged as either indirect or direct and must not be double charged. So I know the regulation is saying no document is required. And yet when you apply to the city and you say, Catherine, I want to use a 10% de minimis rate. Okay, work with Edwin because Edwin's going to ask you for something. What we're actually asking here is that second sentence. We want to make sure that you are consistently charging indirect and direct, and that we're not being double charged. That you actually have an indirect cost pool and we're not being double charged for it. That's what we're looking for. Okay, and then if we're satisfied with that, let's move on with the 10% de minimis rate. Okay, it may be used for as long as you want to use it. If you don't want to negotiate ever, and you satisfy the fact that you're consistently implementing it and you're not double charging, you can use the 10% de minimis rate for as long as you want. The condition here is you cannot come up with your own allocation base. The federal regulation is actually saying if you choose to use 10%, then this must be your base, which includes that and excludes this. Okay, that has to be your allocation base. Note here at the last bullet under includes, you are only allowed to put in your base up to the first 25,000 of each subaward. Anything over 25,000, take it out of your base. Questions? Oh, almost 12. Okay. You can also ask for extensions. If you have a current rate and you want to apply for a one-time extension, you can ask for an extension of up to 4 years. That's a big extension right there. But you have to request for this from your cognizant agency or from us, your pass-through entity. If that extension is approved and granted, you may not request to negotiate a rate during that extension period, which can be from 1 to 4 years. Okay, so if you are approved for that extension, you are stuck with that rate until that extension period is over. Okay, and then at the end of that extended period, you must reapply to negotiate a rate. Okay, there's no extending that 4 years to another 2, 4 years. No, after it ends, you must reapply. If you don't want to reapply, maybe you decide, okay, then I'm going to go 10% de minimis. Those are your options. Subsequent one-time extensions of up to 4 years are permitted if a renegotiation is completed in between these extension periods. So EWDD, we are following the federal rules on indirect cost rates. We actually have an indirect cost rate directive, so it's part of your handouts. One question. 10% de minimis, how is it allocated between admin and program? Good question. So you have to go into your pool. What's in your indirect cost pool? To see maybe you have some executive director there who actually oversees program staff. As far as WIOA, that's program. So it really depends on what grant you're looking at the admin program breakdown for. Again, if you don't do that determination, and I can determine that for you because every agency has different indirect cost pool composition, right? So go look into your pool and see what's in there. If you don't do that exercise, everything is admin. Hamanan? Hi.
Hi. Sorry. So we are limited on 25,000. I see. So the 10% is not taking us more than what we are expected. So up to only 25,000. So that's if it is over, it's going to be disallowed.
You take it out of your base. That's what they're saying. And really, the federal government is allowing you to charge up to 10% without even negotiating. But they gave that to you with certain conditions. So either that or you apply for a rate. You negotiate. If you think you're going to be able to recover more than just what the 10% de minimis can give you. If that's too little compared to what you can recover, maybe make the decision that it's worth it for you to negotiate.
Okay.
Sometimes you have these nonprofits who just don't have the resources to go back and forth with the federal agency to go through that entire process because it can be cumbersome to negotiate. They could just do 10%. It's meant to relieve those smaller organizations who just don't have the resources to do that. But if you do, and you think you're going to be able to recover more than what the 10% can give you, then by all means, negotiate.
Thank you.
Okay. Which one?
No, it's 12.
Oh, it's time? Keipp is also my timer. Okay, I'm not going to go through, but these are the different types of indirect costs. Many of you will be using different ones. We usually have a problem where people are using this. You have a provisional rate and then your final rate comes up later and it's different. Now you have to recalculate, and then you have that overbilling issue. Just know that that's the disadvantage of having a provisional rate. Direct costs will consist obviously of admin and program cost. What's admin and program will depend on the funding source. WIOA has a very strict definition of what's admin. CDBG has something completely different. So it will depend on how that's defined by your funding source, your grantor. You also have indirect costs that may not necessarily be all admin as far as your grantor is concerned. It may also be a combination of admin and program. What happens is, if that's the case, that's your direct and that's your indirect, you may have that admin cost there, and that portion is what cannot exceed the grant limitation for admin. In this case, for WIOA, for example, that overlapping area there, which is partly from direct and partly from indirect, cannot exceed your 4% gap. And again, if your indirect cost pool, if you're giving us a hard time as far as breaking that down and you don't want to go through that exercise, what we're saying is that indirect cost pool will be deemed 100% admin. So chances are, because of that admin cap, you will not recover most of your indirect costs. So when we're asking for you to break it down, we're actually doing you a favor so that maybe you can recover most of it if there's some program component to your indirect cost pool. Okay, otherwise it's 100% admin. Common findings: costs shifted to city contracts due to funding deficiencies in other funding sources. I cannot beat this hard enough. No shifting of cost, okay? For WIOA and workforce programs, I tend to see the admin cost portion of the indirect cost pool being reported as program. Indirect costs broken down between admin and program based on budget. I see that a lot. Cost allocation to various funding sources based on budget. Or you don't have any supporting documentation for your allocation base that you use to allocate your cost pool to the different funding sources. These are very common findings. Salaries not supported by time records or cost allocation, those are usually big question costs. No quiz time, it's lunchtime. Okay, guys, so I will see you. It's 12:05. I will see you back at 1:05. You guys have a good lunch, okay?
I muted you.
Yeah, I muted it.
Thank
All right,
you.
thank you.
Thank you.
Where is it? Okay, number 5. Okay, that's the one.
Is that quiz 5?
Yeah, we'll go through it together. Do they see it? Okay. All right, let's go through it together. Question number 1. You guys ready? A cost is allocable to a particular federal award or other cost objective if the goods or services involved are chargeable or assignable to that federal award or cost objective in accordance with relative blank. Somebody. Luis.
Number C, benefits. received.
I'm sorry, Luis.
Number C.
Okay, Mary's excited. Benefits received. Very good. Too small, huh? Okay. Number 2, a cost objective that is used to, oh, what is that? I was half asleep when I was doing this last night. A cost objective that is used to accumulate indirect or shared costs that are subsequently allocated to one or more indirect cost pools. Okay, there. Did you guys hear me? I'm on number 2 now. What's the answer?
A.
Yes, intermediate cost objective. It's a parking lot, right? It's a staging area. Very good. Number 3, cost that can be identified specifically with or can be directly charged to a final cost objective, relatively easy, with a high degree of accuracy are called?
Direct.
See, direct
costs. Direct costs.
Good. Number 4, false. If directly related to a specific award, certain costs that otherwise would be treated as indirect may be considered and charged as direct costs.
True.
True. Very good.
True.
But what do you need to avoid?
Double dipping.
Double dipping.
Right, okay, you make sure that what you charge as direct, you take it out of your indirect cost pool. Number 5, the mechanism used to measure the extent of benefits received when allocating cost pools to multiple cost objectives is called cost pool, indirect cost rate, allocation base.
Allocation base.
Allocation base.
C. Yeah, allocation.
True or false, actual allowable expenditures from the prior year may be used as an allocation base to allocate current year's costs.
False.
False, it cannot. You need to use the same period, current year. I see a typo there. Number 7, a written plan that identifies allowable, direct, and indirect, and the allocation methods used to accumulate and distribute such costs is called
Cost allocation.
Cost allocation.
You guys ate lunch, I didn't. So, okay, very good. Thank you. Cost allocation plan. 8, true or false, cost allocable to particular federal award, but which does not have sufficient funding to cover this cost, may then be charged to another federal award or another program as long as it is fully documented.
False.
You guys make me so happy. You guys will not have findings anymore. Yeah, no more cost allocation findings, Edwin. 9, true or false, only an NFE who has never had a federally approved indirect cost rate may use the 10% de minimis rate.
True.
False.
Read that again. Only a federal NGO.
What you have here is the old rule. The new rule is, even if you've already had one, as long as you don't have a current one, you can choose to do the 10% de minimis rate. That means you don't want to negotiate. Let me just use the 10%. You can do that now. Yeah. Okay, number 10, a non-Fed entity who has a current federally approved indirect cost rate may request for an extension of that rate for a period of up to 2 years.
False.
What is it?
4 years.
4 years.
4 years.
Up to 4 years, okay? Can you then ask for another extension to go another 2 years?
No.
No, you have to renegotiate, and that applies if you're negotiating with us as well, okay? Very good. I think almost perfect score from what I've heard. Good job, guys.